This is Lucas. I'm a business development executive with Phillip Nova. During this webinar, if you have any questions, do type them into the question box and we'll try to address them during the Q&A session at the end of the webinar. Without further ado, let me invite our speaker, Mr. Jun Kit, our FX strategist at Phillip Nova. Jun Kit, over to you.
Hi, thank you very much, Lucas. Hi, a very good evening to everybody. My name is Jun Kit from Phillip Nova. First of all, thank you very much for joining us today on this Thursday evening. So first of all, we'd like to address something. Some of you may notice that we have changed our name from Phillip Futures to Phillip Nova. So actually, this just happened early this year. The reason that we have switched our name from Phillip Futures to Phillip Nova is that we are expanding our product range. And so we hope that our name would also reflect that expansion of product offering we have to you. Okay, so before we move on, it is important to disclaim before we start our session that whatever that's going to be covered during this session is only for educational purpose only. It does not constitute any investment advice, and it absolutely doesn't take into consideration your personal risk appetite as well as your investment objective. So we do hope that you benefit from this webinar only as from the educational point of view. Okay, so once that is out of the way, we can move on to look through the outline for today's webinar. All right, first of all, we will start with an introduction to technical analysis. During this portion, I will also briefly touch upon fundamental analysis so that you could get an idea of what both approaches are about, and therefore you'd be able to compare and contrast between these two very different approaches. Okay, then I will dive into the basics of technical analysis. So those are the things like Japanese candlesticks, chart patterns, trend lines, and as well as some technical indicators. And lastly, we will also have a Phillip MT5 platform walkthrough where we will demonstrate to you how, in general, or the basic way that the platform works, as well as applying some of these technical analysis that we have learned from this session. And on top of all this, I'd also like to share with you that at the end of this session, we have a very exciting promo that is only exclusive to those of you who have attended this session live. Okay, so I would highly encourage you to hang around and stick around till the end, where we will reveal to you this exclusive perk to you. Okay, so I think if we are all ready, let's move on. Okay, so you know, when we trade a Forex or when we trade basically anything, there are two types of analysis that we can take. So the first one would be the fundamental analysis, and second one would be the technical analysis. Okay, so what is fundamental analysis? So basically, fundamental analysis, it helps us to shape our trading decisions based on macroeconomic factors that would that will affect the supply and demand for the currencies. So let's take an example for Forex. People look at fundamental data like gross domestic product, inflation, employment rate, interest rates, COVID-19 situation, etc., etc. So in fundamental analysis, essentially what people will look at is the actual things, actual events that is happening that affects the supply and demand for currency. Okay, so some of the macroeconomic factors such as the state of economy, the outlook of a particular industry or sector if you're looking at stocks, the impact of global events on economic outlook, monetary policies, interest rates. And for microeconomic, this is more applicable for perhaps stocks or stock CFD. Let's say you're doing fundamental analysis. So you would look at a business model for a particular stock, the management, the competitive advantage, the earnings, etc. Okay, so in these events, because then some of the reports that people pay attention to, let's say for gross domestic product, when they look at the economic event, economic calendar, they will be referring to events like GDP. For data like inflation, people would pay attention to reports like consumer price index and etc. Okay, so I'm just going to briefly go through here. So basically, how people gauge the fundamental analysis is based on the actual result versus the expectation. So let's say looking at assessing a health of a country. So people would be looking at its economy, which is gauged by the GDP. So let's say people would forecast that this GDP would come out at this certain level, but the actual level is actually higher than that. So this would actually cause the appreciation of that particular country's currency. So in general, that is how it works. Okay, so I think that is just a brief overview of the fundamental analysis. In this webinar, we will talk a little bit more about technical analysis, which is what we use to help us shape our trading decision using price charts as the main analysis tool. So technical analysis will help us to understand the market sentiments based on historical price movements. Therefore, we are able to forecast the future price movements. And from this, we will determine the entry and exit points when we are trading. Okay, so by now, some of you may be able to tell that, fundamental and technical analysis, they are totally different things, like completely diverging ideas. So when you're a technical analyst, an analyst, you look at the price, you look at the charts, and you totally would disregard the fundamental side of things. Okay, so basically, the technical analysis, people would go on with this assumption that history will tend to repeat itself. So basically, that assumption is the basis or the foundation of technical analysis. Okay, so some of the concepts that we first need to learn before starting to do technical analysis is concepts like candlestick, support resistance, channel, and patterns. Okay, so for each of these items, I intend to go through them slowly so that hopefully you get a good understanding in a simpler way. Okay, so first of all, when people talk about analyzing chart, so how does the chart look like? So mainly there are three types of charts. The first one is the line chart. So this one is pretty basic. This line chart is applicable to basically anything lah. Okay, the line chart, so basically the benefit of this line chart is that you are able to see a very smooth out movement of the price without much information. So basically you can just see the up down without much information. So therefore, in technical analysis, we would look at other kind of charts, for example, a bar chart. Okay, as you can see here, it looks a little bit different, a little bit more complicated than the line chart itself. Okay, and thirdly, we have this most popular one, which is also my favorite, which is the candlestick chart. Okay, so next up, we will be talking more about the Japanese candlestick to give you an idea of how to read a chart like that and how to extract information from it just by looking at the chart. Okay, so in candlesticks, there are two types of candlesticks. But first of all, let me first address why is it called the Japanese candlesticks. It is merely because it was invented by the Japanese, so therefore it is called the Japanese candlesticks. All right, so there are two types of candlesticks. Firstly is the bullish candlestick. Secondly is a bearish candlestick. So for those of you who are still new to this financial market, whenever someone says that something is bullish, that means they believe that it's going to go up, it's positive, it's going up, it's rising. When somebody say that something is bearish, that means that it is going down, the prices are dropping, and basically it's negative lah. So when you see a bullish candlestick, it means that the price have increased. On the other hand, when you see a bearish candlestick, it means that the price has fallen. Okay, so candlesticks, they can be applied on charts across different time frames. So let's say if you are looking at a daily time frame, so it means that one candlestick, it represents the price movement of one day. So let's say you are looking at a 4-hourly chart, each candlestick represents movements of every 4 hours. Okay, so depending on what time frame that you're applying to, one candlestick would represent movement in that particular time frame. Okay, so let's talk about the anatomy of the candlesticks. In a candlestick, there are like two main components. The first is the body, right? You can see the thick box in the middle. That is what we call the body of the Japanese candlestick. Secondly, we have the upper wick, and then we have the lower wick. Okay, so let's everyone, let's just focus on the bullish candlestick first, where I just briefly go through how is it read and what each of these the part mean. Okay, so if you look at the bullish candlestick, right, the bottom end of the green box, it is the opening price of a particular stock or forex pair that you're looking at. So the bottom is the opening price. And so let's say we take an example of a daily chart. Okay, so one candlestick represents a day. So during the day, the price opens down here. And during the day, throughout the day, the price has risen to this high point, which is indicated by this upper wick. And throughout the day, we also know that the price has fallen down to this low point as indicated by the lower wick. but at the end of the trading day, the price has closed higher than the opening price, and it is up here at the close. So therefore, what makes this a bullish candlestick is because the closing price is higher than the opening price. So therefore, it is above and the candlestick is green. Okay, so I hope that helps you understand, but we will still go through the bearish candlestick. So bearish candlestick is basically just a mirror of the bullish candlestick. So price would open up here, and throughout the trading day, we know that the price has gone up this high, the price has gone down this low, and eventually, at the end of the day, the price was actually lower than the opening price. Okay, so from here, we just by looking at this candlestick, we already know, like throughout the day, how the price moved. Did it go up? Did it go down? How high did it go? How low did it go? And eventually, at where did it stop? Okay, so a Japanese candlestick is a very popular kind of technical analysis chart that people look at. Okay, so that is the Japanese candlesticks for you. And while Japanese candlesticks are useful, they are not quite meant to be used on its own. So it is only powerful when you use it with other factors, like you compare a few candlesticks together. Therefore, you'd be able to tell a more complete story. Okay, so from here, we're going to just show you 3 types of powerful reversal candlestick patterns. So what are reversal patterns? So reversal patterns basically means that when the candlestick displays this kind of pattern, we can predict, or there's a high probability that prices will reverse to the other side. Okay, so there are a few types of formation, a few types of candlestick formation that will help us know that, which is the doji candlestick, engulfing candlesticks, or hammer or hanging man candlesticks. Okay, we're going through one by one. So one of the candlestick, it is the doji candlestick. So of course there are 2 kinds. So the first is the long leg doji, which is a bullish candle. The gravestone doji is a bearish candle. So what happens? So let's recap back to the concept that we talked about just now. Let's just look at this long leg doji. We know that the price opened at this line here, this horizontal line here. Okay, the price opened here. Throughout the day, the price went up this high, it went up this low, and eventually it still closes back to this line here. So basically, essentially, the opening and the closing price, there was not much change. Okay, so at this point, what it means, what it tells us is that there is a significant indecision in the market. So, you know, the market couldn't decide or if it's going up or going down. So basically, the buying and selling force, they are equal. Okay, so on the gravestone doji, however, it opened down here. Then throughout the day, it went up high. You know, the buyers, they tried to buy and the prices went up, but eventually the price didn't manage to stay up there. Eventually it still went down, even lower, slightly lower than the opening price. So this would here mean a bearish candlestick pattern. Okay, so basically what this tells us is that if you spot these at some strong support or resistance level, it could mean that there's a possible reversal in trend. So right here I have a screenshot. Okay, so look at these candlesticks right here. So let us try to identify a few of the candlesticks that we talked about. Okay, so just like 5 seconds, quick one. Okay, so let me reveal it to you. Here we can see not only one, but 2 long leg doji candles. Okay, so like I mentioned earlier, so this would help us to predict the reversal of the trend. So you see earlier, prior to the occurrence of these 2 long leg doji, prices were going down. Okay, so it went down all the way here. Then coming to this point, which is near a support level right here, then you see that the buyers and sellers, they are like somehow fighting each other. They couldn't really decide. So this would signal that, you know, the tides are turning. Then eventually it did go up. Okay, so that is the doji candlestick. Next up, we also look at the engulfing candles. Okay, firstly, we have the bullish engulfing candles, which normally occurs after a series of downwards candles, like after a series of bearish candles. Then you see this final red candle, followed by this huge green candle. Okay, so this means that, you know, the buying force is so large that it engulfs the previous bearish candle. Okay, so this normally also signals a trend reversal to the upside. So the mirror image or the opposite of the The bullish candles is the bearish engulfing candle. So basically the same lah. After a series of upward moves, then you have this huge red candle that shows that all the selling force is here. It really just overtakes the buying force, and price tend to reverse afterwards. Okay. So thirdly, we have this hammer, which normally occurs after a series of upward moving candles lah. So the hammer will occur when the closing price is very close to the opening price, with the body just concentrated at the top. Okay, so from here we can see that the price opened up there, but the selling force did try to come in to set it down all the way here, but the buying force came in and eventually it still managed to pull the price up. So this is quite a bullish sign to look at. Okay. You see, so this one prior to this screenshot, it was downtrend. So after the downtrend, a few of this hammer happens. So you see that the sellers did try to push the price down for a few times. Then the buying force still managed to come back and overcome the selling force. So from here, we can somehow tell that the buying force is here and the prices will tend to reverse to the upside. Okay, here is another example. Okay, so basically the hanging man is the opposite of the hammer. Okay, so after a series of upwards candle, then it will further decline if there is a hanging man. But all these it shouldn't be these are all, we're looking at candles, this form part of our technical analysis. It doesn't necessarily mean when you see a hanging man it has to be that prices will reverse to the downside. So first of all, it is the game of probability. We are predicting how it will react based on the past reactions. And secondly, in technical analysis, there are a few areas that we need to look at. We assess these factors together, then we decide, oh, is it going up or going down, and how do we place a trade? Okay, so from here, I have covered what is a Japanese candlestick, how do you read it, and some of the popular Japanese candlestick patterns. Okay, so next up, we will go on to talk about chart patterns. And basically, this section will talk about basic concepts like trend lines and all that. Okay, so for now, I'd like to take a 5 seconds break just to take a sip of water. Okay, so to further analyze charts, so now we know that how each of the candle tell you about a story about a price. So when we link a series of candles together, from there we are able to tell the trend. So in technical analysis, trend is one of the most important concepts. So really the trend is a friend. The moment you learn about trend, basically you're halfway there into technical analysis, in mastering technical analysis. So in general, prices can move in 3 ways. Firstly, it can move up, which is known as the uptrend. Okay. Secondly, the price can move down, which is a downtrend. Okay, and if the price doesn't go up or neither does it go down, the price can go in a sideways motion, which is what we call the sideways trend. Okay, so looking at the chart, you'll be able to identify the up, down, and sideways trend. But if we want to go into like a more foolproof method, how do we determine this trend? Okay, it is by drawing trend lines. So looking at this screenshot right here, let's say if you want to identify an uptrend, what you do is you use a line tool. You are able to use this tool in the trading platform. You draw a line. You try to identify a series of lower points. So in this case, we're looking at the bottom line. So if you connect a series of high-low points, so you identify this point right here, this point right here, and this point right here. If you try to draw a line, right, then you'd be able to link them together in a line. Okay, so this would form as your trend line, your upward sloping trend line. Okay, on the other hand, on the upside, right, you can also try to identify some of the high points and therefore try to draw a line to link them together. All right, so let's say if you only have a bottom line, that is called the support line, and the top line is called resistance line. So what happens when you have 2 parallel lines together, and therefore this is what we call a channel. So in this example, we have what we call a rising channel. Okay, so normally the rule of thumb is that you'll be able to connect 3 low points, not necessarily 3 low points, but 3 points to each side to validate that it is an actual trend line. Okay, so on the opposite end, let's say you're trying to identify a downtrend, you would look to connect a series of lower highs and a series of lower lows. Okay, then you'd be able to identify this channel. But I think all these are still theory to you, but later on in the platform demonstration, I will be showing to you how to use these tools and how do we identify these points. Okay, so I've been speaking about support and resistance a few times, but what they actually are. Okay, so this is another important part that we need to understand before learning more about technical analysis. Okay, so basically resistance, it actually is somehow like an imaginary ceiling that price simply cannot go above. Okay, so looking at this illustration here, so the arrow would signify price. Okay, so let's say the price goes up, it meets this level, right? Come to this level, then it just bounce back down. Okay, so when it comes to this level and price cannot go up, that means there's a resistance, like the market resists from the price going up. So once it reaches this point, then market will tend to retrace and come down to this point. And this is where we have the support level, which is an imaginary floor that price just cannot go below. Okay, so whenever the price comes to this level, the buyers would come in and buy, and the prices therefore will go back up. Okay, so the demand will actually increase when the price come to this point, or people will be thinking, oh, the stock has dropped to this price, it is such a bargain, so people will start coming in, and with the effect of that, the prices will go up. Okay, so if you're going back to the example just now, which is what we see here, it really does look like an imaginary floor or imaginary ceiling that prices, when they come to this level, they just automatically bounce off like a wall. So yeah, basically what is at play here is basically everything you see on the chart is market psychology, is a human psychology. Whenever we see the price comes here, depending on the market sentiment, the market will react based on psychology lah. And looking back at history, like the fundamental, not as a fundamental to be confusing, but the premise of technical analysis is it is basically studying the human reaction, the human psychology reaction on the price chart. Okay, so now we have learned how to draw a trend line. We have the uptrend, downtrend, sideways trend, and we also know that what resistance and support mean. I think we can take our understanding to a bit further. Okay, so we speak about these two levels, but what would actually happen when the price hits these levels? So whenever a price hit this either support or resistance, right, there are two scenarios that could play out. Firstly, it is the price would bounce from that level. So the first scenario is that the prices will conform to it. So let's say if you come to the resistance, you will conform to it and you bounce back. You wouldn't advance further beyond the resistance. And you could also come down to the support and you conform to the support level and you just don't go any lower than that, then you bounce back up. Okay, so there's the first scenario that prices will conform. So as you can see from here, I've drawn a sideways channel, where prices have conformed throughout this section here. Then coming down here, the second scenario happens. So the second scenario is when the price violates this level. Okay, so the price coming to here, it violates the level, it no longer conforms to it, therefore it will break down from this level. Okay, so there are two scenarios. Okay, so this is also another important concept, because as we draw lines, we chart patterns, the breakout happens when the price no longer follows the support and resistance. So when people look at breakout, then they would be able to set up some technical target, like take profit levels. But don't worry, I'll go through that later on, which is the next section. So chart patterns, you would hear people talk about chart patterns in technical analysis. So basically, chart patterns is what you would identify after drawing your trend lines. Okay, so I shared about the trend line first because there's a reason, because in order to come to this part, you need to learn about drawing trend lines. Okay, so after you've drawn the lines, right, there are many shapes that you could try to identify, and these shapes tend to mean that prices will go a certain way. So one of the chart patterns, which is pretty popular, it is called the wedges. Okay, so the one of the wedges is called the rising wedge. The other one is called the falling wedge. Okay, so let's first look at the rising wedge. So what happens here is that you have drawn a line connecting the higher highs. See, in this red line, you've drawn a line here. Then you have drawn a line also connecting the high lows. So what you see here are two lines. They are like converging to each other, like they are trying to meet at the end of the line, so forming something like a cone. Okay, so this is what we call a rising wedge. Okay, so normally so this blue thing is a bit more advanced, but I'll just share it to you anyway. So normally people would identify a rising wedge as a bearish reversal pattern. Okay, so historically speaking, the technical chartists, they look at the charts across history. Whenever there is a formation like this happening, prices tends to reverse back to the downside. Okay, so basically that is all about technical analysis. People look at the past price movements and try to predict the future. So basically that is all. Okay, so normally how would people trade on this is that whenever the price hits below this line, so you might remember just now I said that the price either conform to the support and resistance or they violate it and break. So whenever it breaks, right, that is what we call a breakout or a breakdown. So in this case, right, if the price breaks down from this level, and if the price goes down to this blue line level, so that is basically a validation that the formation is completed, and people would enter here to sell, and with a exit target here. Okay, so prices would tend to come down all the way down here to where the formation actually started. Okay, so that was a extensive explanation on one formation. So the falling wedge, I wouldn't talk too deep into it. So basically it is the same concept, just that it's opposite. After a falling wedge, prices tend to reverse and go back up. Okay, so here is an example of a chart. So from here, right, we can see from here, if you draw a line with this low point here, connecting to this low, you have a support line. Okay, and up here you have a resistance line. If you draw a line across all these top lower highs okay, so what we see here is two lines meeting, therefore it qualifies as a falling wedge. And a falling wedge is normally a bullish reversal pattern. That means after that, the price, after breaking out, the price tends to go back to the level where the formation actually started, which is about this area. Okay, so you see it is pretty amazing, right? Because when it breaks out the target it hits, right, it is really very near to where it started. So this is what we call a resistance zone also. So when prices hit here, right, it could no longer go up. So it is met with another level of resistance. Okay, so that is an example of falling wedge. Another one that's very popular, it is the head and shoulders pattern. What is opposite of the head and shoulders pattern is also the inverse head and shoulders. Okay, so basically chart patterns, all these, they work in like many ways. If you draw like basically any of these patterns, right, if you flip it around, it could just mean the opposite directions lah. Okay, so the head and shoulders pattern, so this normally happens after the price have gone up like for a while. Okay, so after an extensive period of prices going up, then prices try to go up further again. So let's look at the okay, but first let me explain why is it called head and shoulders now. Okay, so as you can see here, there are three peaks. The first peak is what we call the left shoulder, the middle one is the head, and the third peak is the right shoulder. So how people would categorize this as head and shoulders is that the both shoulders, they would be normally almost equal in height, okay, while the head is the tallest lah. So therefore it is the head and shoulders. So what a head and shoulders pattern tells us is that after a series of upward candles, the price moved up, selling pressures are coming in. Okay, people think that the price is too high, so people come in and sell. It reaches this support line, and then the prices, the buyers, they come in and try to buy again. Then price went up, but eventually the sellers come in and say, no, we're going to sell this. Price went down, bounced back up. Okay, so there's this like a tussle between the buyers and sellers for 3 times. forming this head and shoulders pattern. Okay, so the third one, we see that it is shorter than the middle head. So we know that, okay, the buying pressure is really waning already. Therefore, we would predict that the prices would therefore reverse to the downside. Okay, and what connecting all these, the head and shoulders, is the neckline, which is a support line drawn across the swing low here and the swing low here. Basically, you draw a line. Therefore, you know that is neckline. Okay, so how would people like to trade this? So basically, normally they would take the height of this head. So they draw a line here, and then they pull the line over down here, and therefore that is a target. Okay, head and shoulders, inverse head and shoulders. Similar story, but opposite side. Okay, so here's an example of a head and shoulders that we identified on a chart. Inverse head and shoulders, sorry. Okay, so another version of this reversal pattern is the double top or double bottom. So sometimes you will also see things like a triple top or triple bottom. So basically, this also tells you that the price no longer follows the previous trend, and it is therefore bound to reverse. Okay, so these are really interesting chart patterns to look at, and it really tells a lot of story. Okay, so that is basically the chart patterns. So next up, because like I mentioned earlier, right, in technical analysis, you don't only look at one single factor. So we've learned about the Japanese candlesticks, combining a few candlesticks, therefore telling a more detailed story. Okay, then you will also look at the chart patterns. You zoom out wider, you look at the chart patterns. And the third part of it, people will also look at the technical indicators to validate the belief or the projection. Okay, so some of the popular technical indicators is the oscillator. So basically, oscillator is like a pendulum swing. Okay, so it has two bends of the extreme. Okay, so basically oscillators, which are also technical indicators, they help us to identify overbought and oversold conditions. Okay, so this will be used in conjunction with other tools to reaffirm our projection, okay, to confirm our prediction. Okay, so there are two common oscillators that you will hear people talk about. The first is the MACD. Okay, the second is the RSI. Okay, the MACD stands for Moving Average Convergence Divergence. So basically, it has two components. The first is the signal line. Secondly is the histogram. Okay, you can see from here on the chart here. The signal line is the line, and we have also the histogram in this MACD. But then you look at this, but how do you read it? How do you read it? What does it tell you? It actually helps us to identify the strength of a price momentum in either direction. Okay, so there are two ways that you can interpret this this technical indicator. The first is by looking at the line, the signal line versus the histogram. Okay, so whenever that these two, whenever that the signal line and the histogram is above zero, you see there's a line dividing the both sides. When it is in a positive region above zero, that means that the bullish momentum is stronger than the bearish momentum. That means the price is going up. So essentially, when the MACD is positive, the price is also positive. Okay, the vice versa. So as you can see right here, the Netflix, we know that the Netflix has been tanking real bad. So you see in the histogram right here, it is deep in the negative region. Like so we know that the MACD has told us that, oh, this is indeed in a very bearish region. Okay, so the first way is to look at it in terms of positive and negative region. Secondly, you would also compare between the signal line and the histogram. Okay, so let's say the histogram is somewhere larger than the signal line. That means that trend is strong. Okay, so look at the most recent here on the right side. We see that the histogram is bigger, is deeper down than the signal line. Therefore, we know that the bearish momentum is really strong with this one. Okay. Okay, so the other one, which is also my favorite popular one, which is the RSI. So RSI measures the speed of change in price over the selected time period, and it will also tell you like if they're overbought or oversold. Okay, so there are two clear levels in RSI. The first one is the 30, which is the oversold, and 70, which is overbought. So basically, these are the two bands that people look at lah. Okay, so whenever prices go down below the oversold, the buying force tend to come in and prices tend to go up. Okay, but this doesn't always happen. So this only helps us adds to this technical analysis portion, this equation, but it doesn't tell us for sure. So let's say this is a very good example. So we know that the RSI right here, it has breached below this red line, this 30. So if you're just looking at the definition, right, below 30, it is oversold. Therefore, oh, you would go in and buy. But see, that is not true. Prices can still keep going down. Okay, so just to be very aware of this. Okay, so that is a brief overview of two popular technical indicators. And just to give you a comparison between fundamental analysis and technical analysis, right? So basically, fundamental analysis, it caters for more longer term investment. Okay, when you invest in a certain company stock, you would want to look at the business model, the earning potential, the growth of that particular industry. So these are all like longer term, the fundamental analysis. So it helps you answer questions like what should you buy and why should you buy it. While technical analysis on the other side, it is shorter term. Okay, it's shorter to medium term lah. Okay, this would help you to identify entry point. Okay, like we mentioned just now, there's a support resistance level. So a support level, given that it conforms to it, would be a fantastic entry point. Okay, because you know that when price goes down there, it will rebound to the upside. Okay, so it helps to answer the question when. Okay, all right. So next up would be the interesting portion to put what we have talked about into actual demonstration, which I will be demonstrating our Phillip MetaTrader 5 platform. Okay, so this Phillip MetaTrader 5 platform, basically it is our trading platform that you'll be able to trade products like Forex as well as CFDs for various asset classes. Okay, so we're not going to dive in too deep into that. So basically, just to guide you through how this platform basically works. Okay, so let's say if you haven't tried this platform before, you can actually download this platform, demo platform, so you can sign it up. The instructions will be given to you. You can download it for free. So it's basically a paper account, basically. Okay, so let's so basically this is the interface of our Phillip MetaTrader 5 platform. So once you've launched, right, there are many different panels here. It may look intimidating in the beginning, but trust me, as you learn a bit more, it is not that difficult. Okay, it's pretty intuitive. Okay, let's start from the top. At the top here, we have the menu bar, which you can do various functions. Okay, maybe we can go through that when we need it later. Next up, we have the tool menu, the toolbar, which we have various functions like to show all the symbols that we have, to place an order, to zoom in, zoom out, and to choose the type of charts that you want. So many functions. And the third bar here, right, which is pretty interesting. So basically this contains the tools that we will use for technical analysis. So you can see the drawing tools, the arrow tools that will enable us to draw some lines on the chart. Pretty fun stuff. Okay, next up we have the time frame. You get to choose the time frame for different charts, right? Depending on time frame, you can choose it. Okay, so next up, moving on the first panel right here, it is the market watch panel. So when you come to a platform, you need to know like, oh, what can I trade? What are the contracts available? This is where you go to the market watch panel. Okay, so basically what I have done here is I have showed all the contracts that we have. So you can see like we have these Forex pairs, the share CFD pairs, everything. So when you launch it first, it's probably going to be empty. So how do you show all the contracts that we have? It is by right click. Okay, you right click, then you show all. Show all, or in my case, I can hide all. Okay, but let's say if you want to look at all of it, you can click show all. All right, show all. Okay, so within here, right, you can look at the bid and ask price. You can also configure it further by right clicking. If you go to column, you can choose various other information. Like if you want to look at a spread, you can click on spread. Then you see a new column will be added, and you can look at the spread between all these. Okay, so for my analysis purpose, I normally keep it just the daily change, okay, to see how it has moved for the past day. Okay, so of course you can add a lot more depending on your preference. Okay, so this is the market watch panel. Next up, we have this navigator panel, which houses important information like what server are you connected to. Okay, so in this case, it is our server, Phillip Futures, but now we have renamed to Phillip Nova. Okay, so this is how you can tell that what account that you logged into. In here, you also can find the indicators like the RSI, the MACD, So you can find those under here. So within the platform, there are like many indicators that you can slowly learn and explore on your own. Okay, so apart from that, Phillip MT5, we currently have a plugin that you can download. Is Trading Central. So once you have downloaded from the website, right, our website, then you are able to launch it and you are able to access to more functions. Okay, but I think in today's session we won't have time to go through it. But when you sign up for this MT5 demo or you open an account, the instructions will actually be sent to you on how to download them. Okay, so next up, after this navigator panel, we have the toolbox panel. Okay, so toolbox panel basically tells you a lot more information, like your trade information and your exposure. Like let's say you've been trading, how much is your exposure, your history, like your trade history, like your past trading. Okay, in here you can also see live news that is streamed from available sources like Trading Central, FX Street. So from here you can do your own like fundamental analysis, or within this platform there are also like many news that would give you technical analysis also. So these are some of the resources that you are able to access through this platform. Okay, mailbox is where our company would send you daily market updates, and calendar is the economic calendar that would aid you in your fundamental analysis. Okay, so I think these are the important ones. So let's get to the fun part. We've been speaking about technical analysis, so yeah, let's see what we can do about it. Okay, so coming to this part is the chart panel. So whenever you pull a chart into here, this is where you will see the chart. So from here you can see many small windows here. So basically these are all the charts that I have open. So when you first launch it, the chances are it's going to be empty because you haven't launched anything yet. Okay, so how do you launch a chart? Basically, you go to your market watch panel to see if there's anything. Let's say the standard one, euro dollar. Okay, so I search it here. To look at the chart, very simple. I just drag and drop it. Okay, drag and drop it here. Right, then I can choose to maximize it. Or if you want to view a few charts together, you can also minimize it by clicking on this button up here. So if you click on it, if you have a few windows, you'll be able to see them side by side. Okay, so for our illustration purpose here, I would maximize it right here. Okay, to zoom in, zoom out of the chart, you can click on this magnifying glass to zoom out, to zoom in. Okay, and from here you can choose the different type of chart that we talk about. You can choose line chart, candlestick chart, and bar chart. Okay, you can also choose the different time frames that you're looking at. So let's say if you want to look at the daily time frame, you click on the D1, weekly time frame, monthly time frame, and also intraday, then we'll be looking at 4-hourly or hourly chart. Okay, so for today's purpose, let's try with the one day chart. So from here, you may notice that there's a small arrow. So basically, these are like my past test trades. So for demonstration purpose, I like to hide that. Okay, so now our chart is clean. So now you may be wondering, I've been being taught the green and the red candle, but why is it black and white? Okay, so there's a way to change that. You simply go in chart, you do a right click. Right click, you go to properties. Okay, let me do that again. You right click and you go to properties. Click on the properties, then you are able to customize your chart here. So right here under the colors tab, you can go to the color scheme and drop down. And what I would normally prefer is a color on white. Okay, so color on white, this is what we are more familiar with. The background, I like to keep it white. I like to keep it white. Okay, so there it is. So this is the chart that we have. So sometimes when you draw a chart, right, it may be easier for you to move it forward. So there's this button right here to shift the end of the chart to the border here. Okay, right here. Okay, so very simple. So now that we have pulled out our chart, you know how to draw different time frames. And next up, let's try to draw some lines. Okay, so to draw lines, we move on to this tool here. Okay, to draw trend line. You pick on this. So let's try to identify a resistance line. So not sure if you are able to identify. Okay, so let me just show here. You can draw here all the way down here. Okay, so we are seeing a dynamic resistance line right here. dynamic resistance line right here. Okay, so from here, you can identify, you can customize the appearance of this line. You right click, and from here you can just draw the line or a solid line. Okay, so right here, this is just my own preference. Okay, I like it to be a solid line for me to see it easier. Okay, so from here we can see a dynamic resistance line right here. Okay, all right, so this is how you draw a line. Okay, so let's try to identify some chart patterns that we talked about just now. Okay, so I've looked at this chart before, so I'd like to just share with you quickly a chart pattern that I have identified previously. Okay, so let's just remove this line. You simply double click on it. You either click on the delete button, or you can right click and delete this. Okay, so looking at this, so I would like to do a quick exercise, like to see if you can try to identify any pattern here. Okay. Okay, so while you try to figure out, just let me reveal that to you. So first of all, I would like to draw a line here. Okay, see, I'm not sure if you're able to tell yet. So we have a neckline here. We have a neckline here. Then from here, what we do see is a head and shoulders pattern. Okay, so you see a right shoulder, a left shoulder here, a head here, and a left shoulder here, the head here, and right shoulder right here. Okay, so to perfect it a little bit further. Okay, so one very important thing to say is that, you know, the chart patterns that you see are online or in textbooks. So those are textbook examples. In real life, the chart would not be that perfect. Okay, so as you can see, the first shoulder, then you see some choppiness here. So basically, that is how in the real life. Okay, so so what do people do like when they have a chart pattern like that? Okay, they will try to identify the target. Okay, so when the price is here, right? So when I first discovered this chart pattern, the prices was around here. So if you want to point to a certain point in the chart, you can go to this crosshair, this button here, you press. Okay, then you are able to move around, and it tells you the date and the price of it. Okay, so when I first discovered, it was here. So bring it back to the concept, you either conform to the support or you break it. Okay, so in this case, the price has been conforming to the support, conforming to the support, conforming to the support. And until when it doesn't, it breaks this support. What happens when the support is broken? It tends to turn into resistance. Okay, so let's zoom in a little bit further. So after the price has dropped below this support level, right, then it tries to go back up again. See, immediately the support has turned to a resistance level. Okay, so after it has dropped down here, test once. Okay, so at this point we know that, oh, this is solid. Like the price has tested again, has tested and validated that this support has indeed turned to a resistance level. Okay, so then price, you see, upon hitting this level, it went down. Then it tried to hit the level again, second time. So this is a pretty solid indication that, you know, that prices really hit its resistance and it tends to go down. Okay, so for a head and shoulders pattern, how people normally would set a target is that they would draw a line from top to bottom of the head right here. Okay, so this is the length, the height, and they would try to duplicate it down here below the neckline. Okay, so if you want to draw a horizontal line, you can hop onto this line. Okay, see, so let's try to put it here. So you can see that the prices tend to conform pretty obediently to it. See, we predict that the prices will hit somewhere around here, and then subsequently you see that the price really did hit there, and it did, you know, it did stop there. So that was a support level. Okay, so that is one way that we can identify chart patterns and try to predict the entry and exit point. Okay, so what about technical indicators like we spoke about RSI, or MACD? How do we show it? Okay, there are various ways, but one of the simpler way is to go up here, insert, indicators. Then from here, you can choose from a plethora of different indicators. So the popular one would be the RSI. Okay, so RSI. Okay, right, the RSI. So from here, you can see that there's this overbought level and oversold level. Okay, so this would help you determine whether it is actually oversold or should you enter the market or not. But all this, it takes practice to identify. Okay, all right, so that is the RSI, and if you want to look at MACD, it is extracted the same method as well. Okay, down here. Okay, so that is a brief demonstration of how to pull up the technical indicators. Okay, so I think due to the interest of time, I actually intended to go through a few more examples of the chart patterns, but I think for the interest of time, we will move on to demonstrate how you can place a trade. So let's say you've identified all this, right? Then you'd like to place a trade. Then how do you place a trade? There are various methods. The first is going to this market watch panel. You can try to place a trade by double clicking on it. Okay, so double clicking on this is order ticket. All right, so you can see the symbol that you're buying, the type of execution. So the exchange execution, it means that it's a market order. So whatever you put in now, it will buy at whichever the current market price, the best price. Okay, so apart from the market order, you can also choose pending order. So depending on your strategy. Okay, and you have the volume. So if you key in the volume, so let's say Forex, the lot size is like 1 equals to 100,000. Okay, so let's say if you're smaller, then it's like 0.01. So this would only be a 1,000 notional value. So this is a micro lot. Okay, so if you want to place a trade, in this case, it's looking pretty bearish. But bear in mind, whatever I'm doing here is only for illustration, education purpose only. It doesn't mean that I mean that it's gonna go certain way. So this is only for illustration. So for example, I place a sell trade. Okay, so a sell trade has been placed down here. So I'd be able to monitor my trade in this panel. Okay, so from here you can see the time, the type of order that you made, the volume, the price. Okay, and in trading, there is a very important thing of paramount importance. It is risk management. So one way to manage your risk is by setting stop loss levels. Okay, so to modify your stop loss on MT5 is pretty easy. After you place a trade, right, you can see that there's a line here. Okay, so you can just click on it, you drag it. If you drag above in a sell order, so that would be a stop loss. Okay, right here. So let's say okay, so it will prompt you to confirm. So let's say you confirm. So essentially what stop loss means is that when prices goes opposite of your favor, it will automatically cut for you to realize your loss to prevent you from losing too much. Okay, so it protects you from over loss, essentially. So on the other hand, you could also set something called the take profit, which in the sell order, if you pull it down lower, so this would be setting a take profit level. Okay, so after you have set a take profit level, when the price reaches certain level, it will automatically sell for you and realize your profit. Okay, so that is how you can place a trade right there. Okay, so to close the trade, very simple. You can simply just cross on this trade right here. Okay, close. Okay, so there it is. I've demoed a trade, an example trade. Okay, to see what we have here. Okay, so just a brief explanation of what this means. So basically, we have a few items here. The balance is the total balance that you have in your account. Secondly, we have the equity, which is the floating balance in your account. So let's say you have a deposit $100, no, $500. Okay, so that amount will stay there as long as you do not buy or realize any profit or losses. So if you're holding on a position, it is making an unrealized profit. That means you haven't sold it. You have a profit, but it is unrealized. Your equity would increase to reflect that. But until you close that position, your balance will remain at the balance which you have funded in the beginning. Okay, so a free margin, it is the margin, basically the money that you are that is available for you to use as margin. Okay, so that is how to place a trade. Okay, so let's say if you want to look at a few charts at the same time, you can do the same. You pull, drop, drag, and drop here. Okay, just the same way that we've gone through. You can customize it in many ways. So let's say if you want to look at them side by side, you can just click on this. It would be displayed side by side like that. Okay, you can do this for many charts lah. Okay, so I think that is almost the end for my platform walkthrough, but do stick around where I will share with you an important announcement or perk that is offered to you only. Okay, so Once again, I would like to thank you very much for joining us today. I certainly hope that it was fruitful. And for all of you who are still here now, I'm very happy to share with you that you've been entitled to this account opening promotion. When if you open an account, either a Phillip Nova or Phillip MT5 account, which I've demonstrated just now, you are able to receive a $50, 50 Sing dollars trading credit when you fund in a minimum of $1,000. Okay, so this is only valid if you scan the QR code right here. If you open an account within 24 hours from now. Okay, if you scan this now and you open this within 24 hours, the system will capture. And if you fund the $1,000 within a week, and you'll be entitled to this free $50 trading credit. Okay, so you can also look at the TNC of this promotion with this link. And yeah, it's also so the reason that I say this is only extended to you is because for those people who are watching this, the replay of this webinar, they may scan this QR code, but it would no longer be valid anymore. Okay, so take note for those of you who are interested to explore, you can scan this QR code. Okay, so I think with that, okay, so for those people who are interested to try out the platform for free, if you're not ready to trade yet, you can scan this QR code. So basically it brings you to a demo sign up. You can try out the platform for free without any funding requirements. Okay, so I think that is all for my sharing. Thank you very much for listening. And I'd like to pass the floor back to Lucas to see if we have any questions that we have time to address. Thank you, everyone.
Right. Actually, that's all the time that we have for today, right on the dot. Thank you so much for being a wonderful audience for tonight's webinar. A link to the recording of this webinar will be available in our follow-up email tomorrow. So if you have any queries that you would like to ask us, you can simply always reply to our email, and then we'll be in touch with you. Okay, so thanks all. Have a wonderful evening ahead. This is Lucas signing off. Thank you.